Welcome back. You're still tuned into Midcap Radar. Well, Shriram Properties is in focus. The company recently acquired 4-acre land parcel in Bengaluru. The company also has 47 projects in its pipeline. We have Gopalakrishnan J, the Executive Director and Group CFO of the company, joining us now. Mr. Gopalakrishnan, good afternoon. Thank you so much for joining us. Well, this new land parcel that you've acquired, can you give us more details in terms of how much did it cost, how will you be financing it, and by when will you start construction on this one?
Good afternoon. Thank you for having me on the channel. So yes, we acquired a land parcel for about 4.09 lakh square foot built up area. So it's a land parcel located in a micro market called Chandapura near Electronic City in Bangalore. So it's a sizzling micro market, much in demand. So there were intense competition. So for sensitive reasons, I'm not able to put the number on the table, but the acquisition cost is very competitive, and this project should have an revenue potential of about 250 crore or more as we launch in the next 6 to 7 months.
Okay, so you're saying that this particular project has a revenue opportunity of close to 250 crore.
Yeah.
So just to step back a little bit, in the quarter gone by, especially in the Bangalore micro market, there was a significant issue of a water crisis. There was also the heat wave. So how much did that impact construction activity, and would any of your launches or deliveries get delayed due to that?
Water problem was there, but I don't think it had a meaningful impact or any material impact on the construction activities. The constructions are mostly done through in-house, like borewell waters and so on. So I don't think construction got impacted. Customer thinking kind of bit changed whenever they come to the site. That was another variable that they were checking on: what will be the sustainable source of water, what will we be providing, and so on and so forth. So I think that became another variable that they were thinking through in evaluating projects and micro markets. But beyond that, it didn't have a material impact on our construction schedule or therefore delivery timelines.
Okay. Mr. Gopalakrishnan, I know you will not be able to give definite details about Q4, but can you give us a sense of some of the projects which were moved from Q3 to Q4 or postponed from Q3 to Q4? Will it help you achieve the guidance that you had given? Was Q4 better than Q3?
Q4 numbers were very attractive. As you rightly observed, I won't be able to disclose the number right now on this call, but we ended very close to what we were aspiring to do for the full year. And we had 2 launches, and the launches did very well. One of the launches that we made a public disclosure on Shriram Sapphire, which is again somewhere in the same micro market that we have now recently acquired new land parcel. That project got sold 70% in the first weekend, and now it's almost like 50 days. In the last 50 days, we have sold 75% of the project. So markets are doing well. If you have enough supplies, I think we can sustain and in fact enhance the growth momentum in the coming year, in this current financial year.
So in Q3, you had mentioned a couple of points. Number one, you said that there was deferred launches that you've just mentioned. You've made 2 launches in Q4, and there was also delayed income recognition on a few of the projects that you were, hopeful of getting recognition for. Now, Q4, can you give us a sense that the 2 launches that you spoke about, were they part of the plan to be launched in Q3? And you had also mentioned there was a delay in receiving an OC. Did that also come about for the Bangalore market?
Yeah, multiple points you raised. So let me try and answer one by one. If I miss something, call out.
Sure.
From the launch perspective, we had targeted 3 launches in Q4, which were like some of them came from Q3 to us. I think we did 2 of them, one in Chennai and one in Bangalore. Both did well. The third one in Pune got moved to Q1 FY25. Despite this, we still managed to reach very close to what we have set out the target for ourselves for the full year. From the revenue recognition perspective or the OC delay issue, as we said, post results announcement in February 24, we by then had received most of the OCs, and we had about 45 days to complete the registrations. And I'm very happy that we did close the year with over 3,000 handovers, which was our original target. Therefore, that should help our revenue recognition momentum for Q4. So I think we are on a good footing as far as Q4 is concerned, and even stronger footing on FY25 outlook is concerned.
Okay, Mr. Gopalakrishnan, last question before we let you go. Can you quickly tell us what's the plan with finance costs? 11.5% is the cost of debt right now. You do have plans of net debt zero, but by when? And is there a plan to get your cost of debt down as well?
We have, on the cost of debt, we have actually come down from about 14% to 11%, despite 2% higher hike in RBI bank rates. So effectively a meaningful reduction from where we were 18 months ago. We are still working on it, but further fall from here will be smaller in quantum. We would be very happy if we can stay around the 11% mark for this year. We don't see going below, far below that number for this year. That's primarily coming from increased bank share of loan than NBFC and the other funds. From a debt perspective, I think most likely we will end March 24 when the audited financials come out. We'll be ending with about 400 odd crores of net debt and 0.34:1. That we expect by end of current financial year, we should be around 0.25:1. And that would put us in a much stronger footing. So the gross debt as well as net debt will go down through the financial year FY25. Zero net debt, I think we would most likely be in FY26, early part of FY26. May not necessarily happen in FY25 unless some of the land monetization in Kolkata get accelerated and deliver big cash flows.
Okay.
Right, sir. Right, sir. So thank you so much for your time and thank you so much for joining us here.
Thank you.
Let's now slip into a short break. We'll get you more on the markets and put focus on CDSL and Anup Engineering. Stay tuned.